As the co-director of the Center for Economic and Policy Research. Mark, we appreciate you coming in.
Thank you.
Let's talk about part of Dan's report, which indicated that overall there is this talk of the slowdown in Latin America, but specifically we heard the Peruvian finance minister say we didn't do enough during the boom years. We needed to diversify our economy during that time. How common is that answer writ large in Latin America?
Well, I think that's true, but that's a long-term problem. I mean, development is a long-term process, so I don't think that's the worst of it. I think, a lot of what's attributed to the slowdown in commodities or the fall in commodities prices, or for that matter, the whole growth period that they had from 2003 to 2010, is not really so much a result of commodities. Mm-hmm. So if you look at Brazil, the largest economy in Latin America, and they're having a recession right now, and that's mainly a result of government policy. That's mainly a result of the government listening to the most powerful interests in the country, the banks, the financial sector, tightening their budget, raising interest rates very high, and basically pro-cyclical, we call pro-cyclical policies that for a couple of years now have pushed them into recession. And so a lot is going to depend on policy. Now, it's good that the Fed, the IMF is at least saying that the Fed shouldn't raise interest rates. Mm-hmm. But there's also fiscal policy. I mean, part of the reason why Latin America didn't do worse during the Great Recession is because many countries had expansionary fiscal policy. The IMF should be supporting that again today.
So you brought up the U.S. Central Bank, and everyone in this country and really around the world is on sort of Fed watch, if you will, watching to see if they will raise rates by the end of the year, which is something the recently released Fed minutes are indicating is possible. How would a rate hike at this point affect specifically Latin American economies and then more broadly the global economy?
Well, I think it would be negative, but it depends very much on whether it's just a one-time increase of a quarter point.
Even a 0.25% would negatively
Well,
impact.
It depends what the markets expect and what the Fed indicates is coming after that. But it's definitely something that they shouldn't do. There's no reason to do it. There's no threat from inflation. I mean, they're supposedly looking primarily at the United States. There's absolutely no inflationary threat here. And that's the real problem. I mean, if you want to look at why the world economy is as bad shape as it is, it's really mistakes in the biggest economies, especially Europe. That's the worst. They've got twice the unemployment that we have because their central bank has been extremist in this respect.
So for Latin American economies specifically, is it too late for them to diversify their economies? That has been part of the conversation at these meetings.
Well, it's not something you can do in a year or two. They have to change they have to have a development.
They're going to lose a little bit of margin, right, because of what's going on in the global economy and their trading partners kind of slacking off. The growth is slowing.
Yes, but the most important thing for them now is to restore growth and employment. And for that, most of them are going to need expansionary fiscal policy. And for the most part, they can do it because most of them do not have balance of payments problems. Mm-hmm. Brazil, again, is a good example, over $360 billion in reserves. They're not going to run out of foreign exchange if they put the economy on a growth path. So that's very important. Again, that's where the IMF has really failed. And it's worth pointing out that Latin America had its big growth, return to growth in the 21st century after 2 decades of one of the worst failures in the history of the region. 20 years with almost no growth in income per person in Latin America. And that was when they were listening to the IMF policies and Washington's recommendation. And so it was really when they kicked out the IMF and really changed their economic policies that they did much better in this century.
I want to just bring you, looking forward, a lot of pledges were made and a goal was set on climate and funding the developing economies that need help mitigating the effects of climate change. A goal was set of $100 billion a year, which one UN official called a political number. What's your take on how reachable these types of figures are globally, given what we're seeing in the growth patterns of the global economy? Are these realistic?
Well, they're not enough. But I guess I would say, show me the money. Where where
are you
are
going
the
to get it?
governments that are going to, yeah, and it really is their responsibility because still most of the carbon that's in the atmosphere has come from the rich countries, and so they can't really expect the rest of the world to pay the price for that, and it's really their responsibility to mitigate it.
Well, Mark Weisbrot, we thank you for coming in and talking to us about the global economy tonight. Thank you.